NBI.com. This is John, the reporters for the 4th. Well, all those people who were, complaining that the Fed was going to change their mind are now complaining the Fed hasn't changed their mind. Oh, well. We don't care. I mean, we could see the readings regardless of this. It was an interesting one to note just for cursory, study in the future. When MBI Magenta is above the 25 level and you get a cross below of the MBI Blue and an expectation of the MBI Red dipping down towards the 10 area, usually pressure creates a situation where there's downside pressure, and you can usually look for a little bit the more extended run. Obviously, you're going to want to see what we're seeing here in the case of white MBI moving up and that. But from a daily standpoint, historically, I think you could even go back to even over here where we're well into a nice strong spike. The blue is below the gray there, and then I mean, we would signal a little earlier the dip below the 33, but just a couple bars later, it signals with that same dip of the red, and you get the carry through. Likewise here, the blue under the gray, and then you had the dip. So just depending on the status of it, we signal just a little bit earlier than that, but that confirmation of the red dipping. I haven't checked to see if it's just a red pivot lower. I might look into that one, but I think it's just something to look for those that like to watch the indicators for clues to bigger, broader moves. From an NQ standpoint, already ugly with the readings, but now it gets even uglier with the white MBI leading now magenta. The expectation would be a move towards the zero. Not unexpected. We figured that whatever popped up from here, once we had the MBI white leading in these previous spots, that it would lead to a move to the zero. You just have to wait for it. Nothing strange. 90, 90 a barrel. Again, this is problematic because there's really no reason to have oil at this level, and that is a primary driver of inflation. And um, it has to be intentional because everybody knows this. This isn't some guess. Um, it- it's obvious. I mean, lower gas prices have always yielded lower costs in general for everything, and have resulted in economic growth. So the fact that you're purposely not uh, doing that it's telling. I think we'll see if what is it, 4 days for the election, if people grasp some of these economic concepts or not. I'm not all that encouraged that they will. It seems to be outside I mean, there's some that believe you fight inflation by spending more or having more stimulus checks. They exist out there. You can hear them. Contrary to everything we know to be true, but hey, in this world these days, you can say kind of whatever, and as long as you have the right people on your side, you get away with it. From a Euro standpoint, speaking to people who just say whatever, yeah, the EU, ECB is saying they're going to tighten some point and really get everybody else's budgets in line, and then they will only be losing trillions instead of several trillions. 0.97 to the dollar, still incredibly high given where they're at. And treasuries, 95 range, still a little high. It should be down towards the 93. The yield should be up a little bit, but you're going to get some play back and forth on that. But needless to say, it all did what was expected of it, is in the range. And the reality is, the Fed has gone pretty aggressive, and they believe that there's still plenty of room, which it appears because, as I've been pointing out, we've seen nothing but resilience from the U.S. economy so far. I think it's going to become telling for Black Friday and those kind of things. We'll really see how stressed the consumer is. But in a way, think of it from a broader standpoint. You flooded the market with all of these dollars, and with the inflation, you kind of suck them out of the economy, or at least redistribute them into places where they're least likely to get used, in the hands of corporations, because they're going to either store that money and or buy longer term items, so it doesn't get played out like the stimulus cash does. And now you're going to be in a situation where do we see if some of that free cash flow is sustaining things, or has it been used up? And that'll pretty much be the telling factor. We know it is for the lower side of the economy, no question about that. They're going to suffer the worst. It's usually when the upper middle, if they start to suffer from some of the inflationary pressures, then we'll know that things are at a tipping point, or at least a serious move towards recession in a stronger way, because I think there's been a significant enough slowdown to call it that. It just hasn't been, they were always touting a soft landing. Who knew? They actually may have gotten away with it, at least in the near term. From a gold standpoint, again, uh, it's interesting. Central banks quietly buying actual gold, even though the derivative market of it on paper and stuff has been kept rather low. You're starting to see that in some places the spot price for the actual metal is different than the traded price, which makes the paper derivative trade kind of senseless when the actual commodity can't be purchased for it. So go figure. I'm sure there's going to be people doing arbitrage on that one, because, like, yeah, take physical possession, because um, good luck. Yeah, I doubt it's available. And of course, Bitcoin. Everyone was like concerned Bitcoin would crash on this. I was touting just the opposite, and back over the 26 level, and I think it's got a potential to move towards that 22 resistance point. Uh, we'll follow it. But I think in general, the cryptos are going to fare better under these conditions than not. So I think that we've seen a real flushing out of the speculative tone. Some could argue that they've been trading more predictable and calm than the regular markets. So when you've reached that point, then you've actually become something. From a 50K standpoint, we had a nice decline basing right at the 23. This is an interesting one because a pivot lower on the 50K for the magenta below the 25 range is going to spell doom, and we've already got white spiking. So if that does that, I would expect to move to the zero. That's all the way down at 37 intraday. It's just really fun intraday because we've been getting some great moves. This is a beautiful run. Um, Again, magenta staying under that 25 and continuing to pivot lower. Beautiful. It did pop up briefly, but not anywhere above the 23%, and immediately pivoted back. New lows. Same situation. We ended up with a little bit, this time, bigger move up above the 33, but as soon as it breaks below, and this was a little bit later, someone playing off a DOC, which is that cyan spider right here, could see that we were going to fade this dip. A little bit tough in that case. You just sometimes wait for some of those to really become clear. Even from an upside standpoint, there was an argument to be made, but when I'm seeing new lows being made, that's just a hard no on the long. At that point, you've got to prove the reversal, which is usually a close above 23%, and that's why the paper is always going to stay red in those cases. You get the yellow dust. Now, conversion wise, when the green crosses above DOC red moving from below negative 13 above, yeah, that I think is a turn. I'm going to adjust that one because that's pretty clean to an upside move. And scrolling across after that nice little run, we ended up with some more sell signals. And you'll get this from time to time, this little dip where it comes down below. And this is kind of interesting because from what we were talking about on the daily, you can see that you had the blue below gray in this particular case, but no red dip below the 10. When the red does dip below the 10, boom, cascade. So bear that in mind. it's worth an exploration. And I'll probably run a program on it just to verify that that's exactly what happens in all cases, or at least a high percentage. Because again, you're never going to find anything that's 100%. It's always um, some factor of deviation, because one point or another, one algo will finally detect that setup and try and attack it when it occurs, particularly at its tail end. From a later part of the afternoon, we just get some clear sell signals, just some softness, and it's all been bought up here in the post market and just reversing them back. So it's all the people that are just trying to get captured on one end or another. I mean, if you want to be short, you better be doing it on days that are up. You want to be long, do it on down days. That's sounds simple, but whenever you have a converging signal, now of course from my viewpoint, that starts with a 5K move and then to a 50K, and you want to see all the things lining up to be able to stay with any of those, and particularly now with the volatility that we're seeing, these swings are significant. That's why I think the intraday, this particular stage, is the play. As always, though, trade well. Look for me in the Skype chat. Catch you later.